Welcome to Corporate Finance. Welcome to Session 2 of Introduction to Corporate Finance. The session focuses on financial statements, taxes, and cash flow. First of all, we're learning objective-wise, we're going to talk about the balance sheet. What is the balance sheet? It's a one-day snapshot of financial condition done at the end of each month, the last day of the month typically, in U.S. corporations. It's what we own on the left side and what we owe on the right. Next, we're going to look at the income statement. Sales minus cost equals net income in simplest form. Sales at the very top, net income at the very bottom. Build your income statement vertically. Your boss may call this a P&L, profit and loss, same thing as the income statement. Next, we'll move on to corporate taxes. What are the corporate tax rates? What are personal tax rates? How are they different? Who sets tax rates? How did the Tax Cuts and Jobs Act of 2017 impact corporate taxes? We'll discuss all of that in Learning Objective 3. And finally, we'll talk about the cash flow identity. CFFA equals CFTC plus CFTS, free cash flow from assets. These are the 4 key learning objectives in session number 2. Here's some key formulas, balance sheet, and I do want you to know these more than memorize them. So we will look for patterns, we'll look for mnemonics, especially in Chapter 3, Session 3, when we get to it next up. But we'll want to look at, are there any patterns or trends I can use to know these concepts rather than memorize them? Some of these are standard and you just have to memorize them. Some of them, we can see some patterns. Like if you look at the first equation here and the last equation, you see some similarities there. So we don't have, once we know the balance sheet identity, we don't have to memorize the cash flow identity. So let's get started. Balance sheet is assets, what we own on the left and what we owe on the right, liabilities, plus stockholders' equity. So if I take my assets, pay all my bills, my liabilities, what's left over is residual. That's known as stockholders' equity. Net working capital is a foundational equation that we want to remember and never forget. Current assets minus current liabilities. So remember that one. Very important. The income statement equation is sales minus cost equals net income, or NPAT. Sales has another name. It's called revenues. That's the top line. Expenses has another name. It's called cost. And net income has several names. The Wall Street Journal calls net income profit. The Wall Street Journal calls net income earnings, and you're supposed to know, oh, my boss called it NPAT. And I said, what is that? I didn't know. It's net profit after tax. All those things mean net income, all the same, different terminology for the same thing, and you're expected to know that they all mean net income. And finally, the cash flow identity, as I said, looks a lot like the balance sheets. If I know the balance sheet, I don't have to memorize the cash flow identity or equation. Just put the words cash flow in front of assets. Cash flow from assets equals cash flow to liability holders, otherwise known as creditors, plus cash flow to stockholders or equity holders. So know these equations from Chapter 2. They're very, very important.